MBS Mortgage Bro Science. Welcome back, everybody. I got a little overzealous. I already wrote PITI on the board, so I apologize. It wasn't in real time. All right. PITI. Principal, interest, taxes, and insurance. I don't pity you because you can't afford a home. It's just actually an acronym that we use. All right. Luna, what do you got? I know. You got a ball? Mother dog's squeaking. She's a loud husky. All right. So we're at principal, interest, taxes, and insurance. All right. So when you have your mortgage payment, all these four come into play. In a previous video, we went over escrows. Okay. So we'll break the line up. We'll divide it into two. All right. So these are going to be your escrows, right? Taxes and insurance. But principal and interest, what I want to do is I want to teach you how to calculate it yourself. Okay. Now, you can go and get the HP12c app. All right. But just because I just want to do it, I'm going to use my own. All right. So what you're going to do, if you want to follow me here, is say you're going to put, I'm going to exclude PMI. Say you just want to put 20% down, all right, on a $625,000 home. All right. Your loan amount's going to be $500,000. It's a lot of money, right? So all you're going to do is you're going to type in 500,000. All right. And then you just hit present value. All right. So you're going to do that 30-year fix we talk about. Today is March 27, 2026. Going rate, just say 6.5 on a 30-year fixed. Okay. So you type in 6.5, okay, G, I, okay? And then you got to do the term. So 30-year fixed, so 30, G, N, okay? And then you're going to have your payment, okay? So that payment comes to $31.60, all right? So I'll try to write those down in steps, okay? I also forgot, anytime you open your HP12c, super important, F clear, G clear. I want you to engrave that in your brain. F clear, G clear. Okay, so you're gonna have N. N is your term. Okay, you're gonna have I. I is for interest. Interest. Okay, and then you're gonna have PV. It's really present value because you can calculate, the amortization of your future balances too. All right, if you want to do investments and stuff like that. But for all intents and purposes, this is for a loan. All right, amortization. That's what we're calculating. So that's your principal balance. Okay, your loan amount from the get-go. All right, PV. And then you're going to have payment. All right, and this is going to equal your payment. Okay, so let's rock that one more time. All right, ready? You're going to have clear, G, clear. All right, this means everything's macroed out. All right, we're back to pretty much factory setting. Okay, so we're going to take 500,000. All right, present value. Then we're going to take the rate, 6.5. Interest, 30. GN. All right, that's 360 months. When you download the app, you will see what I'm talking about. And then you just click payment. So thank God I was right the first time. I have F clear, G clear previously. You're at principal and interest only, $31.60. Okay. So at 500, okay, for 30-year at 6.5. Okay. Remember, everything correlates here. Now you're at $31.60. It's $31.60 and 40 cents, but just say $31.60. All right, we're not gonna get too technical. All right. Now, it's super important you can do this on the fly because once again, it's not rocket science. It's just, it's routine. I do this. My wife yells at me all the time. We're having dinner and just do math. All right. Mainly for like retirement, but point in case. So this is just your principal and interest payment. However, you have those pesky taxes and you need that insurance in case your house burns down. All right. Now, depending on what state you live in. We're in New Jersey, taxes are inherently higher. I don't even want to tell you, like, my taxes for a quarter are higher than yours are for the year if you're down in Florida. All right, but let's just say you have 500 in taxes, okay? And then your insurance has gone through the moon. Like, everyone knows health insurance is a scam. Well, homeowner's insurance, more often than not, you're never going to put in a claim. So they're just racking up that income on you. But you need homeowner's insurance, so suck it up. Anyway, let's assume it's $1,200 for the year. It'll be higher, but for round numbers. So then you have $100 a month, okay? Because this is what's going into your escrow account. Remember we talked about that in the previous video? Okay, so just add this up, that's another 600. So your all-in payment is gonna be $37.60, all right? So that is how you calculate your principal, interest, and tax and insurance payment. Super important number, pretty much the bottom line of what's my payment gonna be? Because that is, aside from the rate, that's what everyone wants to know. So like and subscribe, I hope this helps. I'll do a whole nother video on other aspects of the HP12c. I have a whole book on it, but yeah, MBS, Mortgage Bro Science, we're gonna get after it. Shalom.